Welcome, everybody, and thank you for joining us today. It's an exciting couple of weeks, and it's great to be able to have a conversation with two great guests on this panel. Before I start, I wanted to just give a little bit of context of what we're, how I see the problem set that I want to talk about today. So within everything that we're talking about these last week, this week, and next week on what is on the climate agenda, there's one thing that we've really wanted to zero in on, President Biden is trying to focus on, and that is how do we make sure that we fill in this gap? And that is that we know that capital is there. There's plenty of capital for clean energy. There's plenty of capital to deploy. And we've heard announcement after announcement already on all in the billions of dollars, tens of billions of dollars each announcement. The Emiratis announced just the other day the Altera, which is $30 billion, with some of that being concessional. But how do you face the reality that most of the money that is going, most of the finance that's going for clean energy deployment is actually going to OECD countries, higher income countries, and the ability to deploy capital to middle and lower income countries is not only difficult, as it always has been, but it's actually declining. So it's going in the wrong direction of where it needs to go. And that's part of the challenge that we all see, because how do you really address climate change? And not just on the climate change side, but on the business side, how do you really deploy and say we're going to build out a new energy system that is global if a large part of the world doesn't get any of the investment? And then we create a whole supply chain, if we're successful, that is really around one part of the country, of the world, and then the rest of the world is playing catch up to a bigger and bigger gap. And so that's the challenge that we've been trying to solve. And we're still at the idea phase of what works and what doesn't work. And that's why we want to have the conversation we have today. So as we look to implement these strategies, what we would like to do, and the President of the United States has worked with the G7 on something called the Partnership for Global Infrastructure and Investment, which is exactly that, the idea of driving capital to infrastructure projects for clean energy, but not just seeing clean energy as that, as building the actual renewable energy, but the entirety of the infrastructure that is needed in order to enable a broader investment. So what are the things that will unlock capital? What are the things that connect those markets to global markets that will make it easier to do? Well, how do we lower the cost of capital? Now, to do that, there's a lot of different things we have to do, but one of the most important thing is we, the United States, have to put our money where our mouth is. And two, we have to try to work with other governments around the world to say, how do we work together? How do we pool our capital or invest in a parallel manner to enable the private sector to come and put the money towards that? And that's why I'm really excited about two gentlemen that I'm going to introduce to you in a moment. Two gentlemen who happen to be negotiating at this very moment, today and in the last, feverishly throughout the last few months, to see if we can get a catalytic fund of $1 billion between the United States and India to invest in exactly what I'm talking about. And so with that, I'm gonna turn to that conversation because I want you to hear from them more than you do from me. But Scott Nathan, to my left, is the CEO of the Development Finance Corporation, which is the U.S.'s international financing company, and has a balance sheet of about $60 billion. And over the last few years has a rapidly growing percentage of that is affiliated with climate investing and clean energy, as well as Rajiv Dar, who's the CEO of India's National Infrastructure and Investment Fund, which just by that name you understand it's exactly what we're trying to achieve, which is a privately managed fund manager with close to $5 billion AUM, half of that capital anchored by the government of India, and with a diverse portfolio of assets in India. So it's not just that they're financing, they're actually, I believe you're actually operating those assets. And so I can think of no two better people to be able to talk about this challenge of working towards financing infrastructure and clean energy projects in middle income and lower income countries. So with that, Rajiv, I'm gonna start with you if you don't mind. So first, welcome and thank you for being here. I wanted to ask you first if you can describe the Indian market when it comes to the climate infrastructure deployment. There's a lot of folks who will say, you know, who are not following what's happening in India over the last few years, and will say, oh my God, it's so difficult to make investments. It's very hard to invest in India, especially in infrastructure, especially in climate related. But the reality is that India's story is dramatically changing, and there's been a zero-in focus on making it easier and to deploy capital, and the progress has been, the GDP growth has been nothing short of really miraculous and impressive. So wanted to hear from your perspective, how would you tell people about investing in India at this point?
Thank you for having me. So maybe I'll just spend 2 minutes about what we do, just to get a context, and then I'll talk about and give you an answer about India. So we were set up in 2018, a unique platform, which basically is a public-private partnership where Government of India, being a significant minority, and has created these blind pools of funds. At this point of time, as you mentioned, we manage about 5 billion. Climate is a big focus. The idea is to catalyze capital into national priorities and the national goals, but with commercial returns. So with that objective in mind, over last 5 years, we have created 4 funds. Climate runs across our funds, and at this juncture, we have catalyzed out of that 5 billion. We believe that we'll ultimately catalyze about 20 times. At this juncture, we have catalyzed about $15 billion 3 times. Just to give you a little bit of perspective about what we have done up till now. So we have created approximately about 17 platforms. Most of them are co-managed or majority owned by us. Just to give an example, on the climate side, we have the fastest growing renewable energy platform. We do about 5 gigs there. We're pioneers in doing smart meters in the country. We, at this juncture, have a pipeline which will ultimately end up having a market share of 20% at this juncture. We created a shadow bank for infrastructure financing. The book is approximately about 5 billion. Out of that, 60% is green. So, and if you look at all our platforms, 2-wheelers, 3-wheelers, 4-wheelers, buses, charging stations, generation, water management and water cleanup, and municipal waste. All these aspects of climates are operated by one of our platforms. And that's the catalytical impact we as a fund have created over the last 5 years. Coming back to India, specifically with regard to the climate financing, I'll just give you some statistics. So India has a stated goal by 2030, we have to have 500 gigs of renewable energy, which is approximately about 50% of our overall requirements. We are right now at about 175. 325 needs to be deployed over next 7 years, which basically means anywhere between 40 to 50 gigs per annum. We are, as a country, we're going to do about 20 gigawatts this year. So there's a humongous amount of funding requirements. But having said that, the business model with regards to the renewable energy is now impeccable. All the investors and platforms in the renewable energy space in India have created huge amount of, I would say, value because the overall, I would say, economics and the way the payment mechanisms are now set by the government, every platform is doing well. So I think, and just to give another example, that the overall India's overall per capita consumption is about 1,250 kilowatt hours. The world average is 3,300. So there's tremendous amount of demand, and the business models are right now running without any issues. Just to give you a little bit, 2 minutes on India. So I consider India from a 3G perspective. One, growth. So we will grow plus 6% for next few years. And I'm sure it will be much better as we move ahead. And our base right now is approximately 4 trillion, and assuming that you are growing plus 6% on an annual basis, you can see the multiplier impact. Second is green. The government policy is to push the green agenda, whether it is renewables or whether it is urban infrastructure, buses, EVs, charging stations, and a lot of work has been done from a policy perspective. And the third is governance. The current political dispensation has ensured that the entrepreneurs and their value is protected. So, this is the way I would describe both India as a good destination for investments, and secondly, as NIF as an entity doing its bit.
So, thank you, and I want to come back to you in a minute on a couple of specifics on India. But Scott, I want to turn to you. We saw each other at the APEC summit in San Francisco just, a couple of weeks ago, where we hosted an investor forum with CEOs of some of the largest capital in America. And we were driving at capital towards sustainable infrastructure in the Indo-Pacific. And wanted to see, now that you talked a lot during that forum about the Indo-Pacific, you're now here at COP. If you could just share with us a little bit about how DFC is strengthening and sort of the level of your book for investment, and how does that, if you don't mind, putting it in the context of the US government really doing things differently than we ever have before, of coming in and really becoming an investor and a catalytic investor in the Indo-Pacific.
Thanks, Amos. Thanks for moderating this conversation and for everything you're doing to push forward the President's agenda on this important topic. Rajiv, it's great to be up on the stage with a partner who we hope to deepen our partnership with very soon. And Rita Jo, an important colleague of mine, it's great to see you. I look forward to your comments. And thanks to the Atlantic Council and the Global Decarbonization Accelerator for hosting us. Look, the Development Finance Corporation is just 4 years old, and we were created with the express purpose of upping our game, making sure we're showing up around the world to make a difference, impact in the developing world, for promoting infrastructure, investment, the mobilization of private capital, and we're starting to deliver on that. In fiscal year 2023, that just concluded at the end of September, we had a record level activity around the globe, $9.3 billion of transactions. Over 8 billion of that was qualifying for the President's PGI, and in terms of climate, $3.7 billion of that was climate finance. That's up from just 500 million, even less than 500 million 2 years ago. That's important backdrop to the overall activity. We're also emphasizing making investments in the Indo-Pacific. That starts with India. India is around 10% of our overall exposure. It's a hugely important market for our investments and for pushing forward our agenda, the policy agenda of this administration, but it goes beyond India. Now, I was just 2 weeks ago in Sri Lanka, where we've made a $553 million loan to expand the Port of Colombo, hugely important for free and open trade across the Pacific. We've invested $300 million with ISQ, focused specifically on sustainable infrastructure in the Indo-Pacific. And we have dozens of other investments in total, massively increasing our exposure in the Indo-Pacific. One of the things that is most important from our perspective is the diversification of supply chains. That's, as you know, Amos, that's a huge emphasis across administration policy. And for us, that means in the climate area, making sure that the supply chains for the deployment of renewables are verifiable and are not dependent on one company or one country. India has been an incredibly important partner for us in that. In the last 18 months, we've made 2 deals, total of $925 million of investment for the deployment of solar with the manufacture of solar with First Solar and TP Power, both in Tamil Nadu. These will be providing solar modules and solar panels to the really high demand market of India. This is very important for our work and part of the overall approach across the Indo-Pacific.
Rajiv, wondering, as you listen to Scott and as you're in conversation, and I know that both the Indian government and the US government have announced already the intention to complete this fund, and I know you're working towards that goal. What's the difference, as we try to drive more capital towards clean energy infrastructure investment, what is it about the DFC, or about why is it important for the US government to come in? What's the difference between that for you and the other financiers that you already work with as far as expanding specifically for your project?
So at this juncture, we are talking about a concept, and you call it as blended finance, but the idea is to create a catalytical instrument or a vehicle to make sure that we are able to then fast track the requirement of deploying renewable energy generation in the country. So I'll just give you a perspective as to what we are talking about. So there were 4 things we were looking at: catalytical, greenfield. We were looking at some kind of a support from both the governments. But third, making sure that at the overall perspective, there is commercial returns to international investors. Whereas making sure that the overall fund or the overall concept does not lose its what you call as ethos with regard to making sure that whatever it is supporting ultimately stands on their own feet. So today we have in principle agreement or an arrangement from both US and India government, where we are talking with DFC, where both the governments have said, look, we are ready to support you for $500 million. Now it's your job to get others to also support, plus raise equivalent private capital. And I'll just give you an example that if we are able to raise and create this pool of approximately anywhere, say, $2 to $3 billion, assuming it's $3 billion, I would assume that in its lifespan, it would ultimately support anywhere between $75 to $100 billion of projects. That's the kind of catalytical impact it can provide over the next 10 years. And ensuring that the private players are getting their requirements with regard to the returns, and the sponsors are also getting their requirements with regard to the catalytical impact, as well as their mission with regard to making sure that the climate needs are addressed.
I'm going to turn to Scott because I want him to answer. I want to take part of what you just said. And I think especially since we have people watching and people here from private capital, I think the point that we're trying to do that is entirely different than anything the US government has ever done. We're recognizing that our role is trying to use this more as development in masking as trying to mask as investment didn't work. And so we need to continue to do development, but we have to get in the game of catalyzing the private capital in a way that was learning from the mistakes of the past. And so I would first say what you're two are negotiating now on $1 billion is not that we see it as an ending at $1 billion, but actually creating an infrastructure that can then attract additional money into it as well.
Absolutely.
To increase the how catalytical it is, so leveraging up more money. And that's what we want to get to, is the private sector seeing the government coming in, playing a bigger role with smaller dollars, but the right kind of dollars. And I want to turn to you, Scott. So one, if you can comment on that, because first of all, you come from finance and you're now doing finance on behalf of the US government. But beyond just, yes, India is now becoming your largest market, or is your largest market. but you're doing it, you've just done some things in Vietnam, you're looking at other places in the Indo-Pacific and in Africa. But maybe talk about that, sort of that concept of how we can be smarter use of smaller amounts of money, they're not small, but relatively speaking, to get to the larger numbers that we need.
Well, you mentioned it at the outset. There's a global infrastructure gap. Climate is a huge part of that. There's just no way that governments directly can close that gap. We need to have access to private capital. We're operating in many countries where there's limited access to capital markets. Part of our mission is to mobilize additional capital through our tool set and demonstrate by our involvement that these markets are investable. If we can shift risk to help promote the entry of private capital, if we can demonstrate through potentially concessionary finance or investment directly that these markets do produce good returns, it will be all for the good. I'm in favor of more capital coming through government to get even more leverage on the total amount available, get even more private capital involved. The kind of capital mobilization ratios Rajiv just mentioned are fantastic. I'm very hopeful that you actually achieve that. I look forward to investing that kind of 25 to 1 multiple would be amazing and would be incredibly productive. But across all of our tool set, we're oriented toward mobilizing private capital. Political risk insurance, which helps shift risk and mitigate the risk that private capital is taking, is an incredibly important tool. Loan guarantees and direct lending have an element to that. And DFC has a new tool that the United States Congress gave us, which is the ability to make equity investments. That allows us to be forward-leaning early on in investments to help shape the direction that they're going, influence their choices, and make sure that there are developers and investors active in these markets. We're required to be additional. If there were private capital available, we wouldn't be involved in the 132 investments we did over the last year. But in these markets, there's a dislocation, and there's a huge need for capital. And this, you mentioned it in Vietnam. Yesterday, we signed an agreement with VinFast about e-mobility. We're looking at e-mobility throughout the region. We just backed a small company in Nepal. We have a great deal in Latin America in e-mobility. We're looking at the deployment of renewables. There's critical minerals in the whole value chain that support the development of clean energy. These are all areas where we need to be involved to mobilize private capital to fill that gap and achieve our objectives.
Wanted to say thank you to both of you. Thank you very much for joining us.
Thank you, Amos.
This is a very good conversation, and
you,
I hope
Scott.
to continue. Thank you.
Thanks, Amos. Thanks, Rajiv.
We're gonna continue right along with a similar conversation with the other part of the U.S. government finance, which is Rita Jo Lewis, the chair of the Exim Bank. Rita leads America's Export Credit Agency, and because it's backed by the full faith and credit of the United States government, it assumes the credit and country risks that the private sector is usually either unable or, in some cases, unwilling to accept. So when we think about climate infrastructure and emerging markets, having an export credit agency like Exim can really lower the cost of capital, and it can bring confidence to the project. So Rita is a champion of increasing American exports and specifically on growing the bank's capabilities in the clean energy space. Joining her also with us today is Adam, who I have talked to sometimes more than, in certain cases, and more than I've talked to my own family, but is the CEO of Sun Africa and a client of Exim Bank. Yes. And Sun Africa is a big investor in a market like Angola, where we're going to hear a little bit more about it in doing a major project in Angola, renewable energy. And just to underscore that I'm not exaggerating the importance, the president of Angola was in Washington on Thursday in the Oval Office meeting with the President of the United States. First time an Angolan president has been to Washington in a very long time to meet with the president. And this is part of that change in strategy of making big investments from the United States government into multiple markets. So, you know, I'm very glad that both of you are joining. Adam, let me turn to you first. We're now customer friendly, so we're going to start with the customer first. But if you can start by telling us a little bit more about the Angola project that I just mentioned, a little bit of how much of the renewable energy project you're doing there, and your relationship with Exim, and what does that do?
Sure. Well, our journey in Angola started probably about 6 years ago, maybe 7 at this point. And we initially brought to them roughly 378 megs across 7 sites, which included the largest single solar PV installation in sub-Saharan Africa in Biopio. The way we go about our work is we develop projects in partnership with the government. That is to say, we approach the Ministry of Energy and we decide together what the precise needs of the market are so that we can address exactly what the deficiencies are. And so the first project went so well that they approached us for a round 2, so to speak. And this project was significantly larger than the first. And in fact, it's roughly 500 megs of utility scale, but perhaps even more importantly, an additional 278 megs across 65 mini-grids, which, when complete, will more or less completely electrify the 4 southern provinces. And so, you know, we're not an IPP. What we do is we provide turnkey solutions to state-owned utilities, and so Exim Bank was really sort of the first stop for us in the discussion of how we were going to go ahead and finance this transaction. And from the get-go, you know, Exim Bank was extremely enthusiastic about what we were doing, not only because of the American exports, but because of the social impact of the project. But for us, you know, as I'm assuming many of you in this room know, it's difficult to produce a renewable energy project with 100% of US content, right? And so Exim Bank actually has a number of programs, and specifically the CTEP program, which allowed us to bring in content from countries like South Korea, where we're sourcing our panels, in order to bring a world-class project to fruition.
Thanks, Adam. And Rita Jo, as we talked about before, getting more U.S. government money towards climate infrastructure, clean energy, in places where private capital won't go, how do you make it work? How do you approach it? And how do you make sure that you're not bringing American government money in a place that shouldn't be invested, and where it's on the contrary, it is catalyzing the private sector to come in?
You know, first of all, again, Amos, thank you for having this conversation and for having one of our very serious clients and a long-term client with us in terms of Sun Africa for the largest renewable deal that we have ever done at Exim Bank, and probably one of the largest renewable deals that the U.S. has done on the continent. I think the thing that is important for us to know about Exim dollars is the fact that, and Adam said it right, you know, our mission is about supporting jobs, U.S. jobs, as we facilitate exports. And so we do have a exceptionally very rigorous process that we undertake with our borrowers to ensure that the money that we will authorized for a particular transaction is one where we feel there's a definite, not feel, but we know there's a reasonable assurance of repayment, or else we're not going to do it. It really helps in instances like this, especially very large, complicated projects, when you have the sovereign involved. And the sovereign meaning the Minister of Finance. And so I've been in a number of conversations this week, and ministers of finance, to me, are really kind of stepping up and being in these conversations and not just being in the background, and then you kind of sort of find out about the Minister of Finance, because mostly people have been dealing with the Minister of Energy, they've been dealing with the Minister of Environment, maybe the Minister of Commerce and Trade. And that's not saying, we definitely stopped at all those doors. But we had to stop at the door of the Minister of Finance, primarily because those are the projects that have been prioritized by the government. Not only are they the ones prioritized by the government and the leadership, they are the ones that the government, the leadership, is going to take to their legislature, their parliament, to get approved to be able to move forward. So we have a very strong indication from the very, very beginning that these are projects that we know we can bring to fruition. And so when you have a great company that is looking to do a transaction in a community whereby we understand that, you're right, the private sector may not want to go, or they may not want to go at the level that you want them to. And so the most important thing for us is being at an agency like XM, when you have a mandate from Congress, because we're a congressionally mandated agency, that says they want us to make more of our financing available in sub-Saharan Africa. When you're in an administration like the Biden-Harris administration, whereby PGI is a priority and large infrastructure in these particular communities are important, you know you have not only the backing at XM, but you have the full faith and credit backing throughout the United States government to be able to do these large kinds of projects, even after you've done all your technical, legal, environmental reviews.
But I want to come to you, Adam, because this is you said this is the largest clean energy project XM has ever done. Renewable energy project you've ever done. $900 million, and we're hoping that we'll cover that with another $900 million right after that.
We're hoping it grows, yes.
Adam, I'm selling for you. But, and again, this is $900 million in Angola where a project that going to a private bank or private equity is not an option. And so doing $900 million with the full faith and credit of the United States government behind it, Adam, how much of that is a model that could be then rinse repeat? Meaning that if you can do 500 megawatts in Angola, and we want to do more of this in low-income countries, and you're now talking, I know that I'm allowed to say this, but you're talking to Nigeria about doing a similar project to what you're doing in Angola. You're already going to be knocking on the door of XM again. We want to support you. But how much of a rinse repeat is this to the point that we can, at some point, we don't want to step in every time as the U.S. government to finance. Again, we love the $1.8 billion that we're doing, but how do you get to a point where, one, is it rinse repeat? Can Sun Africa do more of this in other countries across? Do you save on efficiencies having done it already before? And how do we transition to where the U.S. government takes a lower stake and banks and private sector see actually they're making money on this, and actually the returns are decent enough that I can step in now?
Sure. Well, first of all, the answer is yes. I mean, it is a rinse-repeat scenario. We're doing this. We probably have 30 gigs under development right now. The closest thing to completion at this point, in fact, the Minister of Power in Nigeria just announced made the announcement that we're developing 1 gigawatt across 5 sites in Nigeria. And so we're close to executing the contract there. But I think one of the important things to stress, and particularly in relation to your question to Rita Jo, is that, initially a lot of the upfront risk capital comes from us. We have to invest up to $10-20 million in the development activities of these projects. Which luckily, I have shareholders which are willing to take that kind of risk. However, working with institutions like XM Bank allow us to generate a very good value proposition because of the interest rates and the long tenors that we're able to offer. The levelized cost of electricity is extremely attractive. In addition, and sort of in relation to what you were saying, Amos, about PGI, it also allows us to, the renewable energy loans offered by institutions like XM Bank also allow us to wrap up certain things like transmission and distribution infrastructure, which would otherwise be more difficult to finance and certainly on a shorter tenor. It allows us also to increase the social impact of our projects. In the case of Angola, as a matter of fact, we got out to the sites that had been identified by the Angolan government, and we were conducting our site visits, and we noticed very quickly is that okay, this is great that we're bringing energy to these underserved communities, but they don't even have access to potable water. So we have 440 water projects also included in that particular project. With regard to changing the structure, as you know, we've been selected by the government of Serbia to develop 1.2 gigs of renewable energy there. And they're desirous of having more of a hybrid structure, which would involve not only ECAs but commercial lenders. So that's something that we'll be bringing to Exim Bank very soon as well.
I think also, just to add to your comment, when Exim, as America's export credit agency, gets involved in transactions of this magnitude, it sends a strong signal to not only to the market. It sends a strong signal to the market. It sends a strong signal to the continent. But more importantly, with the private sectors, companies that want to invest in Africa, they look to see, where is the U.S. government? Are we going into these different markets? And so that signal that we're sending when we either are putting out our letters of interest, when we are engaged actively in terms of a country, when we're working very closely with our ambassador and our trade and our commercial services team, says that there's a level of confidence that we have that goes way beyond diplomacy. It is really about business. And it is really about making the lives of the individual citizens in those countries better. Because at the end of the day, it's all about impact for us. And we believe not only is it impactful for the country and for us about creating jobs, it gives us also another opportunity to work very closely with our small businesses, which is really important. And it's so exciting to see the level of small business that's going to be a part of this particular authorization. Because around the world, everyone is concerned about jobs. Everyone is concerned about their workforce, and they're concerned about their small businesses to make sure they all have the ability to participate in driving economic growth in one's country.
So I know we're going to be on time, time in a minute, but one of the things I started with in the previous panel was about what are we trying to do differently? And that is what I've seen when I came into the Biden administration is that we have spent billions of dollars, if not hundreds of millions, if not billions of dollars around the world on a lot of infrastructure projects as where we did it a lot of assistance. And there's a graveyard of infrastructure projects because you can get the money to build it, but if it's not commercial, then there's nobody to do the maintenance, upkeep, and the incentive to keep it going. And so we've done two things. One is to try to drive capital. The second is to narrow the number of places that we can do business in. Meaning that if you have $1 billion, you can spread it in 40 countries or you can spread it in 5. And how much can you do? And we're talking about Angola today. I want to give that example because you come to COP, and at this COP, we're talking about a stock take of, that's this COP, of what have we done? And if a few years ago it was 27 cents on the dollar went to non-OECD countries, it's now at 22 cents and it's dropping. And what we've been able to do with the president of Angola coming to Washington to make that point is we've spent over $2.5 billion of US government money in Angola, just in Angola this last 18 months. And that's across infrastructure, bridges, roads, clean energy projects, where 900 million of that is, I'm counting as Adam, or Sun Africa, I should say, it's not you.
Come on.
But it is towards going deeper so that we can get private capital there. And that's why President Biden came out with a statement supporting, in his own words, supporting what the UAE did on Friday, which was the Altera, the $30 billion fund towards clean energy, but much of that will go towards developing in middle-income countries, with some of that being actual concessional or cap returns. So as the two of you, as we close now, the two of you have been here at COP now for a little bit. You're listening to everything that's coming out. Adam, if you can take it from the business side of what are you hearing now that means that you can expand your business specifically in that band of middle and lower income countries? What are you hearing that's different out of this stock take? Are we getting there? Because you're one of the few American companies that's actually investing in these kind of markets. And Rita Joe, if you can talk from Exim's what you've heard in this COP, that means that Exim can actually expand not just by being Exim by itself, but you've done some deals with other ECAs from other countries of how do you drive capital significantly higher than what we're doing. Adam, why don't you start and Rita, you close.
Sure. Well, the discussion about sort of the concessional financing and whatnot is, I think financing for these projects is evolving, and I think it is evolving in a very positive manner. The biggest issue that I always see, and why we rely on our own risk capital at this point, is how long it takes to get from point A to point B when you're dealing with these institutions. And for us, our mission as a company is not to help in a renewable energy transition. Our mission is to close the energy gap in Africa. And so in order to accomplish that, we absolutely have to work with institutions like Exim Bank, because these are big ticket projects, they're large scale infrastructure projects, and we couldn't do what we do without them.
I would say almost the thing that I have definitely seen in this COP that feels different than others is that there is a real sense of urgency. And that sense of urgency is to figure out where in the public sector and the private sector and in non-profit and philanthropic organizations, how can we all come together who are allies and friends so that we can take energy forward. I am very excited about being here because as I have seen the interest that is not from your traditional type of banking and lending institutions, you have more individuals who are actually closing memorandums and closing transactions right here with the different types of announcements that are coming from everyone, not just the venture capitalists, but private equity, family offices, asset managers, and the like. And I have said to our team, those are the folks who have already been investing in these particular projects. If we want to try to help them move to scale, are we going to be able to be there? And so for us, that answer is yes, for all the right reasons that we have all talked about, because at the end of the day, it's about the impact that we can have. It's not just about the profit motive, and we all know it is about individuals and how they are going to do their business. But if people really want to have impact in these different countries, they're realizing that they are looking around to say, where are all the tools that they can have access to that allow them to go into a country and not do a one-off project, but to go deeper, as you said, through these different continents. And so working with co-financing agreements with other ECAs, other export credit agencies, working with our traditional bankers and others, we're very excited to see this COP happen this time because I think we're moving forward.
So if we really want to talk about an energy transition, oil and gas companies have figured out a way 80 years ago to invest in and do big infrastructure projects, big ticket items against a very big balance sheet in Angola or Nigeria, right? So if we want to talk about a real energy transition, is to be able to commoditize cleaner energy so that you can do these kind of projects. So I'm going to ask you, as we stand here today, are we on the path to be able to do that so that we
Yes.
can get the private sector to invest?
I think
So
we
if you're
are.
talking to the banks, do you think that the banks are going to come in and endorse you in the next, as we look for COP, 2027?
Absolutely. As a matter of fact, I'm not really at liberty to say precisely who we're working with, but along those lines, we do have a project under development in a commercial way in order to transition an oil and gas conglomerate to an energy company. And we have specific off-takers in the instance that we're working, very creditworthy mining entities, which will backstop the transaction, and we're very confident that we'll be able to achieve this on a commercial scale.
Do you see it happening?
Absolutely. I've been in some conversations this week where you're seeing that everyone I think understands that one government, one private sector company, one it's not or philanthropic organization can solve this issue. It's going to really require the work of all of us going in together as allies and friends to collaborate and to partner on these very complicated projects throughout the world.
Well, thank you again, Adam, Rita Jo, and to the Atlantic Council for hosting us. Thank you. Please join me in thanking our panel.
Thank you.